Today's guest is a supporting sponsor of Liberty in Finance. Welcome back to Liberty in Finance. We have a returning guest. Kyle Floyd is the CEO of Vox Royalty. He joins us this Tuesday, November 23rd, 2021. Kyle, thanks for coming back on.
Deligen, it's been a while. It's really good to be with you again.
The last few times we had you on, you talked about a story before it became the big news, and that was inflation and how it was going to not only be significant and impactful in multiple industries, notably including the mining industry, but also how it was not going to be transitory or short-lived or just a post-COVID flash in the pan of kind of revenge purchasing or spending of people that had been cooped up, but it was going to have legs and have a dramatic effect going forward. You also talked to us about how the effects of inflation in an environment of real things like natural resources would favor companies that were poised and positioned correctly, for example, as royalty and streaming companies can be, to not bear the brunt of the cost increases, but bear the fruits of the commodity value increases. So could we wind that back to your overall view of the persistent outlook for inflation that you had basically sounded the alarm about nearly a year ago when we first had you on, and talk about how you see that playing out and where you see it going next?
Yeah, look, it's it's unfortunate that you and I were right in our musings and our thoughts in terms of what was going to happen with inflation and the fact that it was very unlikely to be a transitory phenomenon and the effect that it's having on everyday consumers and its effect on the real value of assets. And, unfortunately, it's a pretty profound, and I think it's going to have a significantly more profound effect on different asset classes over the coming months and quarters. I think the market and the world is just waking up to what this means. And I think what we're going to see and what I'm presently seeing just from inbound interest is that investors are looking for what are those inflation hedges going to be? How do I protect my portfolio in this environment? And what we're sensing is commodities, given that they've been historically a very good hedge against inflation, or an asset class you expect to go up in inflationary times. We're seeing that inbound interest, and investors, I think this time around, actually have some different tools to use in terms of how they generate that exposure in asset classes that should do well in an inflationary environment. Royalty companies being one of them. So obviously the physicals have traditionally done quite well. The mining companies, in some cases, have not done as well, but royalty companies kind of uniquely positioned to offer a leveraged upside to commodity prices with a little bit less risk and not being impacted, as we've spoken about previously, not being impacted by the variable cost structure of mining operations, which are also feeling the burden of inflation.
And now we had Ted Butler, who's a long-time and widely followed analyst primarily on the silver market, but to all precious metals markets to some extent. And he talked about the dearth of exploration, development, and production of necessary metals, both industrial metals like silver, but also all kinds of semi-precious and other monetary metals, because of the long-term lag in what would have normally have been in a natural and free environment. What you're saying is that natural resources, including metals, should be in some cases a leading indicator of inflation. We've actually talked to John Williams from shadowstats.com, who said that gold has played precisely that role, as often a leading indicator of inflation, even when it's being denied by official statistics or official sources. Your view of to what extent we're seeing the truth told by metals in the current, say, year, or to when you think that what factors would have to change for that to play out as it has in the past, where metals would be a reliable indicator of inflation?
Look, I'm not a market prognosticator, and at Vox, we try to avoid being the market prognosticators. Look, when we were speaking previously, it was really kind of a personal viewpoint that inflation was what it is and what we're seeing today. I guess from a personal viewpoint perspective, not necessarily as a Vox spokesperson, what I would suggest is it seems like investment interest is queuing up into the late part of this year and definitely early next year. That's just from a multitude of different data points that we're particularly seeing at Vox and in our relationships expanding beyond that in the market, it feels like investors are gearing up for 2022 to be the year of the metals. Whether that comes to pass or not, look, who knows? No one has the crystal ball. But certainly from all the data points that I see, and I'm not, never have been really a tremendous bug of any particular metal. I've never seen so many positive indicators for the metals as I do. And what I'm hearing from investors that historically have had very little interest in investing in commodities, they're actively seeking out how they're going to get that exposure. And it looks like they'll be building those positions in 2022. Yeah,
we've also interviewed some professional money managers, such as Michael Pinto from Pinto Portfolio Strategies. We're going to have him on again next week, who have taken the position that like the first 2 quarters of 2022 are likely to be remarkable turnaround for the metals markets. And I've talked to a number of clients myself who are acquiring physical metals or planning on it, and they're strategically planning whether they should do it before the end of this tax year or at the beginning of the next tax year to avoid, whatever they're selling, liquidating, whatever other asset class they're going to be rolling over into metals or into mining companies or royalty companies because they don't necessarily want to take the taxable gain on their thing that they're rolling out of until the end of the year. So there is, I've also, I guess from the where I stand, also seeing that building pressure of people ready to make significant moves into investing and just trying to time when the right time is for that. In the light of this inflationary environment that's been persisting, you just came out with Vox Royalty did just announce yesterday, in fact, a quarterly results for your third quarter that if you could help guide us in through what were the high points and the key takeaways of that, and how does this inflationary environment manifest itself in the financial performance of your company?
Absolutely. Really exciting quarter for Vox. And again, I think it does speak to what we're seeing, which is overall buoyancy in metal prices. For the most part, metal prices are at or near a lot of all-time highs. And interest in mining companies and commodity assets in general has picked up. And that's really profound for a royalty company like us because we're seeing so much development expenditure on the projects that we have underlying royalties on. And so when you look at our quarterly earnings, almost a record revenue number, very close to it, but record production numbers. So volume produced from some of our key royalty assets, including the Dry Creek royalty, which forms part of the Higginsville operations for Karora, and the Kuyunabing iron ore royalty that we have, along with 2 others that were in production. And then we had the positive news that the Segilola gold asset also entered commercial production in the third quarter. And so we expect that to be additional revenues for us, either late stages here in Q4 or very early in Q1. And so it's this buoyancy that we're seeing across our portfolio, that the organic growth that we're able to present and bring and surface value for our investors is so significant because everyone's every mining company that we have royalties over for the most part is seeing very much increased interest. They have the ability to raise capital. They have the ability to deploy that capital into the ground and bring these projects forward or increase the resources and reserves or increase the production. And so we're just seeing that continue to play out across the portfolio. So this last quarter for us was just a continued example of what we're seeing generally.
Specifically, as you look at the quarterly results that you just announced, where can investors look to see examples of the kind of growth that you've been talking about? Because the last couple of times we spoke with you, you talked about how you're just poised to start entering what would be a significant growth phase of revenue and the number of revenue producing assets, operating assets increasing markedly over the next year. Can you talk to us about what examples people can look to? Where are the key points that highlight those developments in your company's progress?
Yeah, a couple key assets to be looking out for. One is Janet Ivy. So Janet Ivy is in production now. That forms part of the Medulla heap leach operations in Western Australia for a company called Norton Goldfield, subsidiary of the $30 billion Hong Kong listed company Zijin. And that is going through a monster expansion phase. So we believe that's going to start hitting where revenues jump significantly from that project in next year, probably mid next year. Alongside what wasn't reflected in this past quarter's revenues was Segilola has gone into commercial production. We expect to start realizing revenue from that either at the last part of this quarter or early in Q1. So that's going to be added revenue. And then look, Dunnigan, we have 3 other projects that are coming online that we expect in 2022. That's Otto Bore, operated by Northern Star. That's a Western Australian gold project. The Boulong Gold project, operated by Black Cat Syndicate, that is expected to come online. This is all based on operator guidance in the second part of next year. And then we also have the Pitombieiras ferrovanadium project in Brazil, which is guided towards first production in the first quarter of next year. That's tremendous growth. That's 5 going to 8 producing royalty assets. And again, that's organic. That's what's in the portfolio right now. So as these assets start to realize production and realize revenues for Vox, you're going to continue to see that growth in the underlying performance of the business, especially at the top line and operating cash flow as well.
Before we spoke with you last time, and then right afterwards, Vox was bringing out an announcement about doubling their revenue forecast, I believe, and also this quarter, I believe you have confirmed that you're expecting your end of year revenue to come in at the high end of the range that you had previously announced. Can you bring people up to date on that outlook that you're currently presenting?
Yeah, very pleased with what we've been able to release to the market and what the company has been able to generate through the first 3 quarters. We've essentially, after doubling the guidance, we've almost hit the low end of the range where we're sitting at about $3.9 million in royalty revs, where our forecast was between 4 and 5. So we're already pretty much at the low end of our range based on the strength of the production results from our operating parties in the last quarter. We expect that we're well on track to hit the higher end of the guidance. So that's really positive. But as we look forward, 2022 should be the most exciting year yet. 2021 was a tremendous success for the company and for our shareholders, but 2022 is shaping up to be just as much so. And then beyond that, Dunnigan, we have 5 projects that are going to be releasing essentially feasibility studies. One's technically a PEA, but it's an extension of an existing feasibility study for the Bowdens project going underground. So call it 5 feasibility studies coming out next year. That's tremendous growth. That's going to be really kind of signifying and crystallizing a lot of the value that we have in these exciting royalties that are going to be further advanced. These companies are well-funded, well-capitalized, well-incentivized to go from these engineering studies likely into production or be making production decisions. So we're excited about what's in the portfolio. And that's not even beginning to scratch the surface on what we have from an exploration grouping of assets, where we're seeing record amounts of drilling on our royalty-linked projects, really industry-leading in many capacities, at least amongst our peer group. So in all facets, our portfolio is growing ahead of expectations. And it all kind of comes back then again to what's happening in this inflationary environment. Thankfully, the metals are really buoyant. They're a good place to be putting and investing capital. And so we're seeing that play out in our mining companies, our partners' hands, essentially, where they continue to advance the projects, build their projects. And we as the royalty company are really benefiting. And we're not contributing capital to this growth. And we're also not being diluted as it happens. So it's really a perfect storm for our business that I'm excited to continue telling investors about, given the growth that we're seeing.
In fact, you mentioned diluted. I noticed in the press release for your third quarter, it said, under the company's normal course issuer bid, Vox purchased and canceled 454,400 common shares at an average share price of $2.81. That sounds like the opposite of dilution.
In fact, it is. No, we viewed ourselves as very undervalued, and you can see that in that we bought back more than 400,000 shares at an average price of $2.81. We're trading at $3.50 today. Look, I think we're still tremendously undervalued, but at least coming more in line where when we look at making acquisitions and where we see is us stacking up versus our peers on a net asset value basis and future cash flow multiple basis, we're at least coming closer to a number that we view as in line and allows us to continue to grow our business really successfully. So look, I think we used our buyback really successfully. We were able to buy back our shares at a very low price. And you're in fact correct. That's anti-dilutive. So we are very aligned in maximizing long-term shareholder value for our shareholders as our management team and our board. And I think that's evidence of our ability to return capital when it makes sense to investors.
And I wanted to get back to that because you had mentioned investors a few times as you were speaking earlier. And in fact, when we first met you, shares were trading around $2 a share. And then later on our later interviews, we were jumping up to 2.4 and above that, 2.5. Now you're up and around 3. This is significant in just a year's time. Do you see this as you had talked to us in the past about that as the market came to recognize the reality of your ability to deliver on your plans to increase and ramp revenue and the number of and diversity of operating assets, that sort of thing, that the market would eventually not only have to recognize that revenue growth, but would also start to revalue you in a multiple category that would justify even proportionally a higher valuation than just a linear. You just touched on that again, but could you reiterate for people who are considering investing how it is that Vox still represents perhaps an under-recognized opportunity because of that plan that's being realized now for increased revenue?
Yeah, Donnie, we're humbled and pleased that we've been one of the best performing TSXV stocks over the last few quarters, especially compared to many of the peers in our sector. And as we talked about, there's been a lot of validation of our business model, our ability to find value, and our ability to surface that for our shareholders. And we've demonstrated that. That being said, our best days are in front of us. The growth and this earnings report talks a little bit about it. We continue to see so much organic growth that is not reflected in the ultimate value of our shares presently. We still traded at a significant discount to many of our closest comps in the market. And so as we continue to deliver, as the portfolio continues to produce results without us putting any more dollars into the royalty assets that we have, 55 royalties and streams now, going from 5 producing assets to 10 producing assets, having the 5 feasibility studies that are coming out next year. It's a tremendous time to be looking at Vox as a potential investor, and our best days and I think our best valuations are in the future.
Turning our attention once again to the future, as you mentioned, you had stressed in our earlier interviews about your proprietary database of potential royalty opportunities. And for those who didn't watch those interviews or weren't with us back then, could you at least touch on why you see a strategic advantage from Vox's model of acquisitions that are basically cherry-picked to help make sure that future is as bright as you're hoping it will be?
Well, we've talked extensively about what the organic growth is. When I talk about organic growth, that's the portfolio of assets that we already have. It's portfolio royalties that we have that we don't have to contribute more capital towards for the growth to be realized. We're not funding the mining companies as they continue to produce growth for us and for our shareholders. But however, we've also been, over the last 3 years, the fastest growing royalty company as well by volume of acquisitions. And this organic production from our portfolio is evidence that we've been making the right acquisitions. So we do have a database of now 8,500 proprietary third-party royalties that, from our perspective, I believe we have the most full business development pipeline of any royalty company in existence today. And we pair that back to make the best acquisitions at the right time. And so, look, I think 2022 is going to be an exciting year for acquisitions from us. The fourth quarter presents also as a possibility for us to announce some exciting acquisitions. But we are continuing to screen the world for the most interesting royalty assets at the best valuations. And so we continue to do so. That proprietary database that we have, our deal sourcing agents, our technical team on the front lines of our business, all designed to find really good value in the royalty sector and surface that for our shareholders. We're
going to put a link to your brand new Q3 earnings report in the description of this video, as well as a link to your corporate homepage and some information about your stock. Your advice to people who are potential investors and who really want to do their diligence, who really want to dig in and understand Vox before they put their money where their mouth is or whatever, where, in addition to those resources, should they look to get more information about Vox? So voxroyalty.com, great place to start. Also ir@voxroyalty.com. I answer a lot of those emails. Our team is pretty quick to respond. So if there are further questions, further interest, and we're also happy to share, we are now, also happy to report, we're now covered by an additional independent research analyst at Laurentian, Jacques Wortman. So he's a great analyst. He picked us up.
completely independently, likes the business model, appreciates what we're building, believes that we're deeply undervalued. So some of those reports can also be shared when people reach out to us individually, but excited for what we have in front of us and happy to engage also in all the social media channels as well.
Well, Kyle, Floyd, CEO of Vox Realty, on behalf of all of our viewers, we just appreciate, because as Rick Rule talks about, there's a haystack of potential companies in the precious metals space that people could consider investing in. It's great for us to be able to find a needle in the haystack that's showing the ability to deliver on that plan that you have announced to us. And here you're following up and confirming to us that you're on track and even at the high end of the range as you track into the end of this year and looking into next year even more. So always grateful for your presence here with us and all of our viewers here on Liberty and Finance.
Likewise, it's always a privilege to be with you, Dunnigan, and thanks for the opportunity to be on the program.